Insiders family, it's Matt Faircloth. Welcome to DeRosa Insiders Live. This is our weekly live program where we talk all kinds of things real estate investing. Broadcast is on a live stream program here on our YouTube channel, on our Facebook page, and on our LinkedIn channel. So if you guys are a DeRosa fan and you are seeing this on one of those channels, thank you. We appreciate your support, appreciate your eyeballs, watching some cool things that we're up to here at DeRosa. And if you're watching this program on Spotify, thank you. Appreciate your attention there as well. Why don't you take a minute and join us over on Facebook as well. Go over to facebook.com, look up DeRosa Insiders there. It is a free community you guys can join. And there's all kinds of great conversations about real estate investing and about all good things, real estate, cash flow, all that is there. The changes in what people pay for housing and how that compares to the cost of buying a house versus the cost of renting. Okay, let's take a look because our good friends at Newmark have released a quarterly report. And there's a chart here I want to review with you guys. This is the economics, the favorability of buying a house versus renting a house. Right now, look, back in 2006, when the bottom fell out and when homeownership became less fashionable and stuff like that, a lot of this trended down through 2010 and it stuck around, meaning like the cost of someone owning a home versus the cost of them renting an apartment was around the same dollar amount. Look at that. It's a very tight spread, probably a couple $100 spread in the two. Look at what has recently happened, and let's unpack a bit on what that's going to do for the economy of housing and the world and where it's going to take the future here. So if you look, about $1,800 is the national average of what it takes to rent an average home. And this is, I can't say the word average enough. It's average geography, average home size, average, right? That sounds about right for a small family. And that the cost to rent came up $1,100. $1,100 I'm reading the wrong thing. That's the spread. $1,100 is what it cost to rent. So the spread between these two numbers is $1,824. So that means that it's more than double what it costs to own a home. Forgive me. So $1,114 is the average price to rent a homestead for someone, for someone to rent a residence, versus $2,942 to buy. Look at the amount that this has hockey sticked in the last couple of years. Now, yes, the cost to rent has gone up too. Housing cost has increased quite a bit across the globe, but by far, the cost to rent is much less. So that's promising for us as landlords. But what's interesting, I'm going to scroll down a little bit in this report to show you guys the opportunity for us, because in every bit of data, when you guys look at data, you guys should be looking for opportunities on how you as a real estate investor, how you as a business owner, you as an entrepreneur where are things going to go? How can I, as an entrepreneur, as a business owner, take advantage of that change of where things are happening, right? So that means that the cost to rent is much, much lower, right? For all the reasons that you could think of and why the cost to rent's lower, right? And the cost to buy is much higher. Now that's going to probably come down as rates start to creep down, but rate changes are not going to be much. Look, these are all charts of what's happening, what it's done to the market based on rate changes. But this is the change in home sales and whatnot that's happened. Okay, that's, by the way, credit card debt. That's scary. By the way, I wasn't going to talk about that, but I'll just touch it. But credit card debt has gone way, way up for people, consumer loans and those kinds of things. Where's that going to end up? It'll probably put a little bit of pressure on people's ability to afford things in general. But I want to talk to you guys about the absorption rates and the demand rates for multifamily. So there's been very few housing starts in that. This is demand on multifamily and everything like that. Here we go. Here are deliveries of multifamily. Currently, it's peaking. That means there are a lot of a lot of builders probably pulled permits back in here, and they're producing product. And now it's actually causing a little bit of rental softness in big markets like Austin, Texas, and Phoenix and things like that. So this is all falling off. The problem that we're having is that there are almost zero permits pulled for new properties being built. So if you are an existing owner or if you're looking to get in to the rental housing world, there will be, I predict anyway, just through charts like this, there will be a drastic drop in supply of new places for people to rent. So if you go all the way up to that chart at the top, there's a major disparity in cost to buy versus cost to rent. Younger generations are leaning towards renting as well. I think this only goes well for landlords, but it also creates a affordability crunch for people that can't afford much more for their housing. So what this means, the opportunity here is that there's an opportunity to create more housing, an opportunity to, if you want to have the courage to get out there and build something. I think that from what I'm seeing here in the deliverables for what the market's not just we're not delivering enough housing to the market in the velocity that we should, and the housing that we have is needed because the disparity between housing cost for people to rent versus the disparity between that and the cost to buy. So all this is telling me that if you build it, they will come. And I think that what I want you guys to do is consider. And for on the Best Ever show, we're going to be bringing on guests that are going to be talking about all kinds of alternative technology, like modular technology, those kinds of things that are going to be coming into the space to use modular and things to build faster. Because what if you could collapse the time cycle to build and to get it onto the market to be absorbed that much faster? I think that again, if you're an entrepreneur, there's certainly a housing crisis. Depending on who you listen to, it's between 3 to 4 million housing units. These charts here that we've just posted in the comment section of this live stream, I want you guys to go check out, go grab that free report. It'll tell you a lot about where things are going and the disparity between housing cost to buy, housing cost to rent, and the opportunity that I think that there is for us to create more housing, because not much is being created right now, and it's going to get absorbed, right? So it has to, if you're creating something, because of the disparity we have in housing that's being created and the difference between buying and renting. So that's what I got for you guys today. My advice to you is to do what DeRosa is doing. We're going to be getting more into home building and home for lease building more and more as a company. And because we think that in a lot of markets that those houses that we're developing are going to be absorbed easily. So there you go, guys.